Hello and welcome to BYJU'S Exam Prep IAS. Welcome to the third session of Target Prelims 2023 initiative. And as well, today is the third session wherein we are going to discuss very important current affairs topics in the form of MCQ based questions from Indian economy. Now before I start, as usual, a very important announcement. In fact, two announcements. First one, this is the third session as already mentioned. In the Target Prelims 2023 initiative, there are totally 22 sessions. Every day, 7:30 p.m. will go live on the YouTube channel. Please subscribe to BYJU'S Exam Prep IAS YouTube channel. Hit the like button and even hit the icon notification button or a bell icon notification button so that you can get the notification once the stream goes live or once the class goes live. Second very important announcement. We are basically conducting a preliminary test series, PTS, preliminary test series. The test series is available to anybody and everybody who is appearing for the UPSC Civil Services examination, that is for prelims. Should you have to pay for this? Absolutely no. It is available free of a cost. Either you can log on to the website or the BYJU'S Exam Prep app, appear for the test there. And if you want to go have an experience of how it is to write the UPSC examination, actual UPSC examination in person, visit any of our centers, offline centers where IAS is conducted or IAS courses are provided. You can take the test there in the center as well. But please understand this. This PTS, right, it is available for the next 3 weekends before the civil service examination is going to be conducted. Now, these are the two very important announcements. Please look into it. Now, let's start. Before I take up the question number 41, question number 37. Yesterday I told you, I will tell you the right answer. Please do not worry. I went back and I basically checked it. What mistake I did was, I told you that the amount that is kept in the wallet, that is regarding the digital rupee, the amount that you keep in the wallet, they will not give you any kind of interest. I told you that, but while marking, I simply marked it wrong. But the statement is correct. I've told you they will not give you any interest. Statement is correct. So first statement is correct. E-rupee is a fungible, E-rupee in the sense, again I'm talking about digital rupee. Because yesterday I was again going through the comments that you people have given. Some of you mentioned that, sir, you use the term E-rupee. I'm not referring to this E-rupee here. I hope you understand. I'm not referring to this e-rupee, or let me make it much more clear. Let's say digital rupee. So the digital rupee is a fungible legal tender. Yes, statement is correct. Third one, it will be a bearer instrument just like banknotes. Even the third statement is correct. All the three statements are correct. Right option for the question number 37 will be option C. So question number 37. I wanted to give you a clarification regarding that because we have discussed this already yesterday. Now, before I start with question number 41, there was one more interesting statement or let's say comment that was given regarding one of the concepts that I discussed in the earlier session. That was regarding black swan event. I hope you remember that. We discussed a concept called as a black swan event. And have a look at this. I told you one of the examples of a black swan event, I told you a pandemic. Right, or let's say COVID-19 pandemic. Now, just to be very precise here, just like many of these theories, many of the, let's say, the points in the economy, there is also one class of economics who say COVID-19 pandemic is not a black swan event. Some of the experts say, yes, it is a black swan event. Some do not agree to that. So, there is always a dispute regarding that. But any firm example of a black swan event, let's say the 2008 global financial crisis, that's a black swan event. Or introduction of internet, that's a black swan event. Or let's say the terrorist attack on the World Trade Center, that's a black swan event, etc. Done? So these are the two very important points I just wanted to discuss before I start with question number 41. Let's start now. Consider the following regarding taxation. The goods and services tax provides for concurrency of taxation. Now, what do you mean by concurrency? There is a term in the taxation called as tax base. Please remember the term. Tax base. What do you mean by the term tax base? Tax base simply refers to any income, any asset, any property on which government can impose tax and collect tax. I will repeat it again. What do you mean by a tax base? Anything on which government can impose and collect the tax, it is called as a tax base. For example, the income that you earn, I earn, or the businessmen earn, government will impose a tax on this, collect a tax. The goods and services that we purchase for consumption, that is also right on which the government will impose a tax, collect a tax, that is also a form of a tax base. So that is a basic idea. Now whenever you talk about concurrency, what is the meaning of concurrent? Concurrency or concurrent simply means simultaneously, at the same point of time, simultaneously. For example, if you look at GST, can I say that GST can be broken down into two components? GST can be broken down into two components. That is, one is central GST and the second one is state GST. Central GST is basically a tax imposed by the central government. State GST is a tax imposed by the state government. Now many of you will be having a doubt here. Sir, why do we divide this GST into two parts, that is CGST and SGST? The reason is very simple, because India follows a federalistic nature, or federalism is a feature in India. As per the Constitution of India, under the 7th schedule, there is a distribution of tax powers between the center as well as states. But in case of GST, what we have done is, we have taken certain indirect taxes which were allocated to the state, merged that into the GST. Certain indirect taxes which were given to the center have been taken, merged into GST. So the merger has taken place. That is the precise reason we have CGST as well as SGST. Done? So because the two taxes, that is one from the center, one from the state, is applied on the same tax base. I repeat, two taxes, that is the center and the state taxes, is applied on the same tax base. Sir, what do you mean by this? Imagine you will purchase this marker. Let's take a simple example. Imagine you will purchase this marker, GST is applicable. Now can I make the same statement in a different form? If you purchase the marker, central government and state government both are going to impose the taxes simultaneously. I'll repeat it again. Central government and state government both at same time concurrently will be imposing taxes on the same tax base. That is basically the concurrency that the GST will provide. Now let me ask you a simple question, other side. Think of this and answer. How many of you believe in direct taxes there is a concurrent taxation? Let me see. How many of you believe that in direct taxes? Sir, any example of a direct tax? Income tax. Think of this and answer. In case of income tax, do you think there is a concurrency of taxation? No. Indirect taxes, there is a concurrency of taxation. Direct taxes, there is no concurrent taxation. Because income tax, who will impose income tax in India? Central government. Corporate taxes, who will impose it? Central government. So because there is a concept of 7th schedule, tax distribution, etc., GST will basically represent a concurrency in taxation. Now let me ask you one more question here itself. Is it okay if I say that before 2017, there was no concurrency in indirect taxes? Think of this. I'll repeat the statement by the way. Before 2017, there was no concurrency even in indirect taxes. Because central government had different indirect taxes, state government had different indirect taxes. Central government had excise, central government had service tax, state government had VAT, state government had sales tax. Right, so there was no concurrency before 2017. After 2017, it has been introduced. Right, that is a basic idea. Now, any other country where you can see concurrency in indirect taxation like this? There are various other countries. For example, in Canada, you can have a look at the examples here. Remember this. Even in Canada, this kind of a system is there. In Brazil, this kind of a system is there. That is, one more name for this is a dual GST. I hope you know that there is a concept of dual GST in India. Dual GST simply means what? GST can be broken down into two parts, that is central and state, that represents concurrent taxation. So statement 1, goods and service tax provides for concurrency of taxation. Yes. Concurrency of taxation is there in direct as well as indirect taxes. No. So first statement is correct. Right option for question number 41 will be option A here. Let me go to question number 42. Straightforward. Dash is when higher tax rate will lead to higher tax revenues. I'll repeat. Dash is when higher tax rate will lead to higher tax revenues. Tax buoyancy, tax elasticity, tax expenditure, and as usual, none of the above. The right option, right, basically is the second one, that is tax elasticity. Let me explain. Some of you are saying, right, sir, tax buoyancy. Please understand, tax buoyancy is different, tax elasticity is different. Let me explain this. And if you have been reading the newspaper, there was a discussion regarding tax buoyancy very recently. Now, what is this idea for tax buoyancy, tax elasticity? Imagine government is collecting 100 rupee tax. Simple idea. Imagine government is collecting 100 rupee tax. In order to increase the collection from 100 rupee to 110 rupees, there are two ways we can do this. There are two ways how we can increase the taxes collected. One way, increase the tax rate. Any issue with this? Increase the tax rate. Is the logic okay? If you increase the tax rate, automatically what will happen to the taxes collected? Taxes collected will increase. Another way is, if the GDP of the country increases, automatically the taxes collected should also increase. But the difference between both of them is, when the GDP changes, as a result of which, I repeat, when the GDP changes, as a result of which the taxes also change, that is called as tax buoyancy. Whereas on the other side, if you change the tax rate, as a result of which the taxes change, that is called as tax elasticity. Tax elasticity. So one is tax buoyancy and the second one is tax elasticity. Now, first one is tax buoyancy. No, that is not correct. Tax elasticity is the right option. Third term is also given here, tax expenditure. What do you mean by tax expenditure? The government, by providing certain exemptions, will forego certain amount of tax revenue. I'll repeat the statement here. The government, by providing certain tax exemptions, remissions, etc., will forego certain tax revenue. And that the tax revenue that is foregone is called as a tax expenditure. It's a misnomer. Many of you will believe that tax expenditure means expenditure incurred by the government. No. How much tax money will be foregone? Foregone means not collected by the government. That is called as tax expenditure. Right, so right option for question number 42, option B. Let me go to question number 43. Which of the following may result in higher tax to GDP ratio? Which of the following may result in higher tax to GDP ratio? Now, some time ago, just 2 minutes ago, we have discussed tax expenditure, we have discussed tax elasticity, tax buoyancy. There is one more very important term related to the tax and GDP, that is tax to GDP ratio. Now, what is the idea for tax to GDP ratio? Simple idea. The total amount of taxes collected divided by total value of GDP. I'll repeat the statement here. The total amount of taxes which are collected divided by total value of GDP, it is called as a tax to GDP ratio. Tax to GDP ratio. Now let me ask you a very simple question. Think of this. I'm looking at the comment section now. How many of you think having lower tax to GDP ratio is good one for Indian economy? Think of this. I'll repeat the question by the way. How many of you believe that having lower tax to GDP ratio is good for the country? Absolutely no. You should not have lower tax to GDP ratio. You should have higher tax to GDP ratio. Why? Simple idea. Please understand this. Having higher tax to GDP ratio simply means government will have more tax revenues. All of you will agree? Government is collecting more and more tax revenues. That is the first implication. Second implication is higher amount of tax revenues will also mean that government dependency on borrowings will come down. Let me know. Government dependency on borrowings will be coming down because you are collecting more and more tax revenue. Your dependence on the borrowings automatically will come down. That's the second very important point. Third very important point, what about the expenditure? What about the expenditure? Don't you think if the government is collecting more and more tax revenues, their expenditure automatically will start increasing? Because government needs to spend more and more money now. Government needs to spend money on roads, ports, airports, railways, etc. So government will have more money to spend. And what is the beauty of taxation? What is the beauty of taxation? There is no repayment done by the government. I hope you remember this. There is no repayment done by the government. That is, taxes will simply flow from the taxpayer to the government. Government doesn't pay interest on it. Government will not repay the amount to you. On the other hand, if government borrows money, they can also spend money by borrowing. But if government borrows money, don't you think there is implication regarding fiscal deficit? There is implication regarding the total debt of the government. There is implication regarding interest payments. Interest payments are done by the government. In fact, I'll show you the pie chart. As per the budget proposals, I'll show the pie chart in some time, don't worry. A large chunk of total expenditure incurred by the government in every year is in the form of interest liabilities. That's a very, very concerning situation in the sense we are borrowing very high amount of money, we are paying more interest on it. That will limit how much expenditure you can incur. And the fifth very important point regarding this, don't you think it makes perfect sense when GDP increases, the taxes collected should also increase? Think of this. When the GDP increases, does it not make perfect sense to you in saying that the taxes should also increase? The taxes revenue collected by the government should also increase. Otherwise, what does it mean? If GDP of India keeps on increasing and the government, assuming nothing else changes, is not able to collect more and more tax revenue, it simply means lot of tax avoidance is taking place, lot of tax evasion is taking place. That's a concern. Right, so these are certain very, very important points. Come back to the question now. Which of the following may result in higher tax to GDP ratio? Let's start. Widening of the tax base. If you widen the tax base, will your tax collection increase? Of course, yes. Widening of the tax base, automatically the tax collection is expected to increase. Second, more incidences of tax evasion. If people, companies, etc. are evading taxes, will the tax to GDP ratio increase? No, it will start decreasing. Second one is wrong. Increasing of the tax rates. Yes, if you increase the tax rates also, the amount of taxes collected, are expected to increase. And that will increase the tax to GDP ratio. The third one is also correct. So 1 and 3 are correct. Right option is option B, 1 and 3 here. Okay. Question number 44. Consider the following statements regarding windfall taxes. Very, very famous now. Very, very famous in case of India. Right? Consider the following statements regarding windfall taxes. I'll come back to this, don't worry. What is the meaning of windfall tax? Let's start. Imagine you're running a company. Right? Follow this carefully. Imagine you're running a company. Now you will take certain policies. You will implement certain measures, and as a result of this, your profits will increase. That is situation 1. Example 1. Example 2. You are running a company. Because of certain external situation, because of something has taken place in the other side of the market, outside whatever you have done, because of that, your profits will increase. Can I give you a simple example? Current affairs connection. Can I give a very simple example? Can I simply say that one of the outcomes of Russia-Ukraine war, has been that the oil companies in India are earning more profits. Let me know, I'll repeat it again. One of the outcomes of Russia-Ukraine war has been that the oil companies in India, which are present in India, have started making more and more profits. Answer is yes, by the way. Because of Russia-Ukraine war, the international crude oil prices have gone up, have increased to a very high level. The oil companies in India are able to export the crude oil, export the output to the international market, make more profits, right? Earn more and more profits. Now, is it okay if I say oil companies are earning more profits because of an external event, not because of their policies? I'll repeat the statement here. The oil companies in India are earning more profits not because of their policy, not because of their decision, because of certain external event. And this is called as windfall. This profit making, the higher earnings, is called as windfall. Now, Government of India says, I will impose more taxes on you then. I will simply impose more taxes on you. Anyways, you'll have to pay taxes. In addition to those taxes, I will impose more taxes. Why should I impose more taxes? Because you are making windfall now. Right? You are making profits because of the windfall. I will impose more taxes, collect more taxes from you. That is basically the concept of windfall tax. And be very careful here. India is not the first country to do this. Because you have come across in the current affairs, do not be led to believing in a fact that India is the first country. Absolutely no. This is a very common phenomenon in many countries. For example, in USA, they have already imposed the concept of windfall tax. Now, come back to the question here. Consider the following statements regarding windfall taxes. Statement 1. Will promote export competitiveness of the fuels. How many of you believe this is correct? Government will impose a tax on the export of, let's say, petrol, diesel, etc. If tax is imposed, what will happen to the market price of this export? What will happen to market price of the product? Market price of the product will increase. And when the market price will increase, will the competitiveness increase? No, competitiveness will actually come down. So first one is wrong. You can use elimination method. First one is wrong. Will add to the tax receipts of the government? Of course, yes. This is a straightforward statement. Nothing tricky here. It will add to more and more tax revenues of the government. Of course, yes. And please remember this. Government clearly stated that one of the reasons I am trying to impose and collect these taxes is because I want to provide more and more subsidies somewhere else. I have more expenditure in some other areas, so I will collect more and more revenues. For example, during Russia-Ukraine war, what has happened to the prices of fertilizers? What has happened to prices of fertilizers? Price of fertilizers has increased. Government subsidy also has increased. So government said, I will collect more taxes here, use it for expenditure somewhere else. So second one is correct. Will increase the profits of the oil marketing companies. The taxes will reduce the profits, not increase the profits of the companies. So second one is correct. 1 and 3 are wrong. Right option for question number 44 will be option A. Only 2 is correct. Now let me go to question number 45. Which of the following are the components of public debt? Straightforward question. Very often there has been a discussion regarding the debt of the government of India. Now please understand this. There are certain very important concepts that you need to be very careful here. I'll come back to this, don't worry. Whenever you come across the term public debt, it is the debt of government of India. I will repeat the statement. Whenever you come across the term public debt, it is the debt of government of India. And whenever you come across the overall debt, they will use the term overall debt or general debt. They are referring to the debt of the government, that is the union government, plus state governments. The overall debt, they are referring to the union government debt as well as the state government debt. And whenever you talk about the public debt, please have a look at this. This table I have taken it from economic survey, from the most recent economic survey. Whenever you talk about liabilities of the government, whenever you talk about liabilities of the government, the total liabilities of the government will consist of liabilities of the government under public debt, liabilities of the government under, right, the public account, and third one, liabilities in the form of extra budgetary resources. Please be very, very careful here. Right, first component is a public debt, second component is a public account, third one is extra budgetary resources. Now you will simply ask me, sir, how do I differentiate between all of them? What is the difference? Public debt simply means any amount that will be charged on the consolidated fund of India. I'll repeat the statement here. Government borrowings which will be charged on consolidated fund of India. Charged means money is repaid from the consolidated fund of India, and this is a borrowing done by the government. For example, government will borrow from the domestic market. All of you know this? Government of India will borrow from the domestic market in the form of what? For example, government will issue government securities and borrow. On the other hand, government will also borrow from international agencies. For example, World Bank, IMF, etc., etc. And because I am using the term IMF, again I will be very careful here. Right? Government right now has no borrowings from IMF. I am simply saying IMF as an example. Post 2000, Government of India has not borrowed from IMF. Last time we borrowed was basically during the 1990s crisis. We have repaid it. We do not have any borrowings to repay to IMF as of now. Please be very careful. So whenever you borrow from international agencies such as World Bank, IMF, etc., that is also counted as a part of the public debt. Now, right, have a look at this. We can divide this public debt into two parts. One is internal debt, second one is external debt. One is internal debt, second one is external debt. Now come back to this. Which of the following are the components of the public debt? Internal plus external. Right, components of the public debt, internal plus external, 1 and 2 are correct. Right, so the right option for the question will be option A, 1 and 2. But before I go forward, many of you will also ask me, sir, what is the meaning of the rest of the two components there? Total liabilities, you also said EBR is a component of it. The public account is also a component of it. I'm pretty sure when you read polity, you would have come across the consolidated fund of India, contingency fund of India, and the public account. So whatever is the money kept under the public account, it is the liability of Government of India. I'll repeat the statement. Whatever is the money kept in the public account, it is the liability of Government of India. And that's the reason whenever you talk about the total liabilities of the government, right, you will also count public account liabilities. And what is this extra budgetary resources? EBR, extra budgetary resources. That is basically off budget borrowing. Off budget borrowing. Concept of off budget borrowing. Right, so whenever you talk about off budget borrowing, which are done either by the central government agencies, it will be counted as a total liability, part of total liabilities of central government. If you talk about the state government owned entities, SOEs, state government owned entities, if they go for off budget borrowing, that will be counted as a total liabilities of the state government. Okay, right, so that is basically the concept of the debt of the Government of India, the total liabilities of the Government of India, etc., etc. Now let me go to question number 46. Assuming all other things remain unchanged, which of the following may lead to increase in the debt to GDP ratio of the center? Assuming everything remains the same, nothing else changes, which of the following will increase the debt to GDP ratio of the government? Now, right, it should not be very confusing to you if I say that the debt to GDP ratio should not be very high for a country. I hope you understand my statement now. right? The debt to GDP ratio should be manageable. It should not be very, very high for a country. And when you say manageable, sir, any number that you can throw at us where you can say this is manageable. For example, right, the encasing committee or else FRBM review committee. Please remember this. FRBM review committee, encasing committee or FRBM review committee has suggested, has recommended in fact, and we will not be able to meet that, don't worry, has recommended that the total debt in the sense center plus states, the total debt should be 60% of GDP. 60% of GDP. 2023 was the deadline for this. And we are there in 2023. I hope you know that. We have not been able to meet this particular target. But anyways, right, the recommendation that was provided was 60%. Okay, now come back to this. Assuming all the other things remaining unchanged, which of the following may lead to increase in the debt to GDP ratio of the center? Please be very careful. I am talking only about the center. Rising domestic market borrowings. Straightforward. If domestic borrowings of the government keeps on rising, what will happen to the debt to GDP ratio of the government? Right? Debt to GDP ratio of the government will keep on automatically increasing. Right? It will keep on automatically increasing. First statement is correct. Upward revision of GDP. Upward revision of GDP. And I've taken this question from the current affairs itself. Sir, how upward revision of GDP will have an impact on debt to GDP ratio of the center? Let me give a very simple example. Imagine your GDP, debt to GDP ratio. Debt to GDP. Debt to GDP ratio is 10%. 10% means what? 10 divided by 100. That will be 10%. Agreed? Any difficulty in this? I am taking very, very simple numbers by the way. Now, imagine the GDP is revised upwards. GDP is revised upwards, and I hope you know that GDP revision takes place. First advanced estimate, second advanced estimates, after that there is a division, etc. Let's say debt to GDP ratio is this much. Now there is a revision of this debt to GDP ratio. You are focused only on the GDP here. Earlier, as per the estimates given, it was 100. Now it has been revised upwards. Upwards means what? More. So it will not be 100. Let's say it will be 110. It will not be 100. Upward revision. 110. Now you tell me what will happen to debt to GDP ratio. Don't you think the debt to GDP ratio rather than decreasing will start, rather than increasing will start decreasing? Does it make sense or not? Right, rather than increasing, the debt to GDP ratio will start decreasing. Now what will happen if there is a downward revision of the GDP? If there is a downward revision of the GDP, automatically the debt to GDP ratio will start increasing. Right, so if there is a upward revision of the GDP, the debt to GDP ratio will decrease, not increase. So second one is wrong. Right, second one will be wrong. So second one is wrong. You can use the elimination method. You will have the answer. But anyways, increased loans from the World Bank. Increased loans from the World Bank. If the government will borrow more from the World Bank, don't you think the debt will increase? Simple idea. Numerator will increase. And when numerator will increase, the whole ratio automatically increases. Third one is correct. Lower fiscal deficit. Lower fiscal deficit simply means borrowings of the government have come down. When the borrowings will come down, debt is expected to come down. Debt to GDP ratio will become lower, not increase. So fourth one is wrong. So 1 and 3 are correct. Right option for the question number 46 will be option B, 1 and 3. Let me go to question number 47 now. Consider the following statements regarding public debt of the government. A factual based question. Again, I have taken this from economic survey. Economic survey, because questions can be asked even from the economic survey. Let's start. Majority of the debt is external debt. Majority of the debt has a maturity period of less than 5 years. Simply factual question. Right, strictly from economic survey. Let's start now. Debt profile of the government. Whenever you look at the debt profile of the government, The economic survey will give you the information regarding how much is the tenure of the debt, how much of the debt of the government of India is internal in nature, how much is external in nature. If you look at the first part, that is basically the pie chart, you will realize that most of the debt of government of India is internal in nature. Please remember this. And this is nothing new. From many years, most of the debt of government of India has remained internal in nature. So most of the debt is internal in nature. Only a small part of it, generally around 5% of the debt of government of India is external in nature. It is external in nature. Come to the right side. One more graphical representation. In the right side, what they have given to you is a breakup. It's basically a breakup. Breakup of what? Breakup of what is the tenure of the government borrowing and how much percentage of the total debt is there in different tenures. Now please remember this. Generally whenever they talk about Indian economy, they'll say that the macroeconomic indicators are stable. Macroeconomic indicators are stable. Right? Whatever you measure, right? What do you measure under the concept of macroeconomic indicators? One of the indicators that you look at is the concept of external internal debt division. How much is external in nature? How much is internal in nature? Why that is important? Now please have a look at what is happening to Pakistan, what is happening to Sri Lanka. Of course, yes, right? Both of the countries are negotiating with IMF. They want loan from IMF. Even IMF has decided to give loan, right, to Sri Lanka. But is it okay if I say, if a country has a more and more higher debt, external debt, if a country has a very high external debt, something happens, there will be destabilization in the economy. There is a possibility of destabilization in the economy. Sir, how? Look at a country such as Sri Lanka. Can I say that one of the main important sources of income for Sri Lanka was tourism. And what happened during pandemic? Right, during pandemic, tourism was affected. And because tourism was affected, inflow of dollars into that country was affected. Now they have to repay the loans. Where are the dollars? They do not have sufficient amount of dollars. That's the reason they ended up right, defaulting on the repayment. So argument is simple here. Whenever you have very high amount of exposure in the form of a repayment to the international market, that is a concerning factor. What about India? What about the context of India? Very small part of the government debt is external in nature. Even if you take the total, right, external debt of government, private sector, etc., we have sufficient forex reserves to repay the whole debt. Right? So there is no question of instability, there is no question of right, volatility in the context of India. And what about the debt profile? Right? What is the tenure of the debt? Generally, please remember this. Generally, for the government, if you have a tenure of longer term, that is the debt has to be repaid after a long time period, it is considered to be stable for the government. Because imagine you are the Prime Minister. Right? Time is how much? 8:10. I am making you Prime Minister. Enjoy. Right? So imagine you are the Prime Minister. What would you prefer? The whole amount of a debt repaid after 1 month, some of the debt repaid after 5 years, some of the debt repaid after 10 years, right? Some of the debt repaid after, right, 20 years. So obviously, right, you will prefer having a long-term debt, right? Having to repay the debt after long term, right? So what is the tenure of the repayment? What is the tenure of the debt that the government of India has to repay over a period of time? Most of the debt, a large chunk of the debt is having long-term nature, right? The long-term debt, right, is very high. For example, 29.3% out of total 100%, 29.3% is 0 to 5 years, which means more than 70% of the debt of the government will be repaid after 5 years. After 5 years, or else you can take 29 plus 29, 58%. So 58, remaining 42% will be paid after 10 years, which is basically going to work in favor of Indian government. Now come back to this. Right, so first statement, majority of the debt is external debt. First statement is wrong. Majority of the debt has a maturity period of less than 5 years. Statement 2 is also wrong. Right option for the question number 47 will be option D, neither 1 nor 2. Question number 48. Which of the following is or are responsible for the inflow of remittances into India? Right, what are factors which are given here are responsible for more and more inflow of remittances to India? I'll tell you why I've taken this. Please have a look at this. Nothing surprising as such. Nothing surprising. From last 1 year, everybody, World Bank, experts, etc., they kept on saying that the remittances that India will get in 2022 will be all-time high, and more importantly, will be crossing more than $100 billion. I hope you understand this. Remittances that India will earn will be all-time high, will be the highest. And not just that, they will cross $100 billion for the first time ever for India. And that has actually happened. And this is a newspaper cutting that I've taken from a Financial Express newspaper from a couple of days ago itself. 2022 marks the first year wherein India's remittances, inward remittances, have crossed $100 billion for the first time. Now, two very important points here. Why remittances are so important? Why remittances are so important? What has been the trend of remittances? Right? What are the trend of remittances? Now, let's start. What is the trend of remittances? Question can be asked based on the trend of remittances. Please be very careful. Please look at this. Right? Please look at this. And I'll ask you a question now. The inward remittances received by India in the past 5 years have consistently increased. I will repeat the statement. The inward remittances received by India for the last 5 years have consistently increased. Please look at it. Answer is no. Answer is simply no. Why? Right, during the pandemic, inward remittances were affected. Inward remittances were affected. And right, post the pandemic, we have started receiving more and more inward remittances, and we have been able to cross more than $100 billion now. Now let's start. Second point, why the remittances are so important? Why the remittances are so important? Reason is simple. The remittances are very important because they will add to forex reserves. They will add to forex reserves. Right? They will add to forex reserves. Right? Very, very important. Second very important point is, when you keep on receiving remittances, it indicates that the Indian diaspora, that is citizens of India who are working outside India, they are getting more and more money and they are sending the money back to India. Because is it okay if I say this? Think of this. If the remittances come down to India, one of the reasons is because the Indian citizens who have gone outside for work, they are losing their jobs. I hope you can understand the statement here. People from India have gone outside India. For example, they have gone to USA, they have gone to Australia, they have gone to Gulf corporations, etc. They have been removed, right? They have been removed from the job. And has it happened in the recent past? Of course, yes. During pandemic, this is exactly what happened. During pandemic, people from India who were employed in some of the countries, they were removed from the job. And when they are removed from the job, how will they earn money, send back the remittances to India? Of course, that will be affected. Right? So that's the second very important point. Now, look at the statement. Which of the following is or are responsible for the inflow of remittances into India? First statement. Shift from informal labor to the skilled labor in the global market by Indian migrants. This is a correct statement. Please remember this. World Bank last year brought out a report. And in the report, they mentioned that one of the reasons why India will benefit in the form of getting more and more inward remittances is the people from India, the citizens of India, nationals of India who have gone outside, until now, a large chunk of it, they were getting informal jobs, construction work, right? Or let's say driver work, etc. Informal jobs. But recently a trend has arisen wherein people from India who are moving outside India to get jobs, they are getting high paid, skilled level jobs, which is a very good movement. Very, very good movement, because having formal labor is much, much better compared to informal labor. Right? So shift from informal labor to skilled labor in the global market by Indian migrants. That's the first statement. It's correct, by the way. Second, rupee depreciation. Many of you will be confused. How rupee depreciation will lead to remittances? For example, think of this. If you are sending remittances to your parents, right? Imagine you are sitting in USA. You are sending remittances to your parents. Until now, it was $1 is equal to 50 rupees. Until now, the exchange rate was $1 is equal to 50 rupees. Because of rupee depreciation, it will become $1 is equal to 60 rupees. Don't you think this rupee depreciation will work in your favor? I hope you understand the importance of this. This rupee depreciation will work in your favor. Why? Now if you send $1, your parents will not get 50, they will get 60 rupees in fact. So what you will do? You will send more and more remittances to India. Right? Second one is also correct. And this is where I want you to connect to other current affairs. Other current affairs points. Sir, what other current affairs are you talking about? If you talk about IMF, I'll go back to the question, don't worry. If you talk about IMF, International Monetary Fund, IMF will provide loans to many countries. For example, right now, they are negotiating a loan with Pakistan. They have already approved a loan to Sri Lanka. Generally, when the IMF will provide the loans like this, they will impose certain conditions. Have you seen this? Whenever they provide the loans like this, they will impose certain conditions. They will not willy-nilly simply give a loan and say, right, take the money, use it for whatever purpose you want to use it. No, IMF will impose conditions. Right? Why? What is the reason they will impose conditions? A country is already in crisis. If you do not impose any conditions, don't you think the government policies might push the country into further crisis? Logic is okay with all of you? Right? The country is already in the crisis. You do not impose any conditions, simply give a loan. Then the crisis would simply spiral into a country. That is a precise reason. When they will provide these loans, they generally impose conditions. And generally, one of the conditions is to devalue their currency. They could or they may not impose it, because please understand, from one country to another country, the system will change. You cannot simply say uniformly I will impose conditions. One of the conditions they will impose is to devalue their currency. For example, even in case of India, 1991, because of the BOP crisis, we went for devaluation of the currency. What is the reason? Why do they go for devaluation of the currency? Think of this. Apply this logic now. Does it make sense to you? One way the devaluation of the currency will help a country which is facing crisis is, now they will start receiving more and more remittances like this. Any problem with this? Let me know. Any problem with this? I'm talking about remittances. Right? One way that the country will get benefit is, the remittances will start increasing, because the rupee has been either depreciating because of the market forces, or right, it is being devalued by the government. Right? Any other benefits, sir? Of course, yes. What about exports? Exports will become more and more right, competitive. Imports will become very, very costly. Right? So these are basically the connections to current affairs. Please be aware of it. Second one is correct. Higher crude oil prices. How higher crude oil prices will benefit remittances to India? Simple. The crude oil prices, if they increase, some of the countries in the Middle East, where the main source of revenue is crude oil. Understand, statement is correct, by the way, I am explaining that. I will have to, right, I will repeat it. Understand this carefully. When the crude oil prices will increase, some of the Middle East countries, where the most important source of revenue for them is crude oil, will they hire more and more people or not? If the crude oil prices will increase, they will hire more people. And I told you, a large chunk of Indian population, when they go outside India for search of job, they will go to Middle Eastern countries. So if these countries are performing well, they are earning more revenue because of the higher crude oil prices, employment will be very higher, Indian diaspora will be hired there, they will get jobs, they will send remittances to India. Right? So third is also correct. Third is also correct. Please be very careful. I have taken this question from World Bank report. All these are mentioned by the World Bank report. Done. So first is correct, second one is correct, third one is also correct. Right option for the question number 48 will be option D here. Okay. Question number 49. Which of the following have been announced in the budget for the financial year 24? That is for the current year. Right, which have been announced in the budget. Budget in the sense, please understand this. Some of you would have seen the budget speech and you think that, okay, based on the budget speech, I will answer it. Please, no. Right, have a look at this. Absolutely no. Right, so understand the concept carefully here. When I'm saying budget here, in the budget you will have documents. All of you know this? In the budget, you will have documents. Documents of what nature? One is appropriation bill. One is appropriation bill. What is there in the appropriation bill? Government will give you information how much money they are going to withdraw from the Consolidated Fund of India for expenditure purposes. Right? And then there is a finance bill. Then there is a finance bill. In the finance bill, government will give you information from what all sources. From what all sources they'll be collecting income. For example, disinvestment, tax proposals, right, non-tax proposals, etc. All of that will be there in the finance bill. Now, when I say budget for financial year 24, I'm asking you, write anything from these documents. Again, I know that many of you will simply say, sir, how is that humanly possible to buy out the whole set of documents? You don't have to. If UPSC will ask you these kind of questions, they will ask you based on what is there in the current affairs discussion. For example, have you heard of angel tax or not? Let me know. Have you heard of angel tax or not? Right? Yes, you should have heard of it. If you say no now, right, then you're basically living in another planet. You're not reading newspapers. You should have read about it. Now I'll come back to this question because there is a question on angel tax. Let me solve this. Consider the following regarding angel tax. I'll go to previous question, don't worry. Don't say, sir, you're skipping. No, I'll go back to previous question, have patience. Consider the following regarding angel tax. Statement 1. Section 56(2) of Income Tax Act is regarding angel tax. Statement 2, it is applicable to listed as well as unlisted companies. Let me explain the angel tax, then I'll come back to this. Now, what do you mean by angel tax? Whenever you talk about startups, there are certain investors who will invest in a startup in the beginning. I'll repeat it. There are certain individual investors, very, very rich people who will invest in these startups in the beginning itself. And because these individual investors, of course, they are very, very rich, right? Not common man, aam aadmi like you and me. Very, very rich people. High net worth individuals. And because these are, right, individual investors who are taking a higher risk by investing in a startup, these are referred to as angel investors. Angel means, right, basically pari. So, angel investors. Now, when these angel investors invest in these startups, in return they generally take certain amount of equity. They take certain amount of share, ownership in the company. Now follow this very carefully. Slightly technical now. Slightly technical, follow this very carefully. Imagine you are a startup, I am an angel investor. I will give you certain amount of money, that is investment, and in return you will give me certain ownership, equity, share in the company. Now, on what basis will you decide what is the value of the share? Right? I hope you understand this. On what basis will you decide what is the value of the share? Right? Let's say hypothetically, for every 10 rupee I invested, you will give me 1 share in the company. You will give me 1 share in the company. So what is the valuation here? Your valuation is for every 1 share 10 rupee. But what if income tax department says, IT department, income tax department says, no, that is not how I am going to value this. There is a different mechanism. They will say fair market price or fair value of the share. As per income tax department, they will say for every 1 share, the value should be 5 rupees. For every 1 share, the value should be 5 rupees, not 10 rupees. Which means by paying 10 rupees, by giving you 10 rupees, investing 10 rupees, you have given me 1 share. Income tax department says, no, that should not be the valuation. For 5 rupees, 1 share should be given. So can I simply say, I've given higher amount of money for every share? The valuation has been very, very high, much higher than fair market value. In such cases, income tax department will impose tax on this extra valuation and collect a tax. Simple idea. I hope you understand this. Whatever is the excess valuation, as per income tax department, it should be 5. You have taken how much? 10 rupee. What is extra here? How much is excess valuation? 5 rupees. Income tax department will impose a tax on 5 rupees, collect a tax from this. That is called as angel tax. Because it is imposed on the angel investments, it is called as angel tax. Right? So this is a basic idea for angel tax. And if you ask me, sir, why they have implemented this, reason that has been put out by the government is very simple. Government says there is a probability that black money can be used for investments. I hope you understand my point here. There is a probability. They are not saying everybody is doing it. Government says there is a probability that investors might be using black money to invest in the startups. And if I do not control it, what will happen? The black money will get converted into white money in the system. Right? That is the precise reason government has introduced the concept of angel tax. Now come to this. Consider the following regarding angel tax. Section 56(2) of the Income Tax Act is regarding angel tax. Of course, yes. First statement is correct. Second statement, it is applicable to listed as well as unlisted companies. What do you mean by listed company and unlisted company? Listed company means the company's shares are there in the market. The company's shares are there in the market for trading purposes. Can I give you examples of a listed company? Infosys, Zomato, Paytm, Adani, etc. All these are listed companies. Right? So is it applicable both on listed as well as unlisted companies? No, it is applicable for unlisted companies. So second statement is wrong. First one is correct. You'll have to find which are correct. So right option for question number 50 will be option A. Option A is the right one. Okay. Now come back to question number 49, which we were discussing. Let's start. Which of the following have been announced in the budget for financial year 24? Angel tax for domestic investors has been introduced for the first time. Based on the discussion I had just now, most of you will say correct, sir. First statement is correct, but it is wrong. Please be very careful. It is wrong. First statement is not correct. Why? First and foremost, angel tax is not a new thing. Has been introduced for more than a decade in India. For many, many years, it has been introduced. Until now, please look at this. Until now, the angel tax was not applicable to angel investments coming from the foreign market. It was applicable only to the domestic investors. I repeat, it was applicable only to domestic investors. But now what has the government of India done? It has expanded the scope. It has expanded the scope of angel tax. It is applicable to the domestic investors as well as foreign investors. Right? So it is not for the first time it has been introduced for the domestic investors. For the first time it has been introduced to the foreign investors. GST Appellate Tribunal. One more very important current affairs point here. GST Appellate Tribunal. GST Appellate Tribunal has been proposed to be set up as a part of budget for financial year 24. Statement is correct. What is this GST Appellate Tribunal? Simple concept, please understand this. If there is a dispute regarding GST, if there is a dispute, whether it is interstate or intrastate, imagine there is a dispute in the GST. Who should handle this dispute? Right, the authority which will handle this dispute will be GST Appellate Tribunal, GST Appellate Tribunal. Now please be very careful here. What happened was GST was introduced in 2017 and as a part of CGST Act, Central GST Act, there is a provision in the CGST Act for having a GST Appellate Tribunal. But so far the GST Appellate Tribunal was not set up. Right, what we had was basically the VAT tribunals. At the state level we had VAT tribunals, and at the central level we had Central Excise, Service Tax, etc. That is Appellate Tribunal, CESTAT. We had a CESTAT at central government level and VAT tribunals at the state level. The issue with these was we did not have tribunals across India. Especially if you look at the CESTAT, the number of cases which are pending at the CESTAT were very, very high. As per one survey, more than 78,000 cases were pending at CESTAT itself. So there is a long pendency, issue with having tribunals across India, etc. Right, that is a precise reason. That's a precise reason. What Government of India has done is, earlier in the GST Council, a committee was set up. Based on the recommendations of the committee, now we have a proposal introduced by the Government of India for the GST Appellate Tribunal. As per the proposal that has been provided in the budget, we will have benches in all the states. Have a look at this. We will have benches in all the states, and the principal bench, the most important principal bench, will be in New Delhi. The principal bench, of course, will be handling any dispute regarding interstate GST. And the respective state benches will be taking care of intrastate the GST disputes as such. And any issue you want to go for a higher authority, right? You want to appeal against it, you can go to High Court now, you can go to Supreme Court after the Appellate Tribunal. So this is basically the second point which is correct. Third one, debt mutual funds to lose indexation benefit. At least the third point you should not have any issue because we have discussed this in the last session. I told you the concept of indexation benefit, right? What kind of indexation will be introduced by income tax department, etc., etc. Right? So debt mutual funds will lose indexation benefit. Third point is actually correct. So 2 and 3 are correct. Right option for question number 49 will be option C, 2 and 3. Okay? Done? Now question number 51. Let's go to next question now. Question number 51. The term internationalization of rupee often appearing in news is associated with, in the last 1 year, I'm pretty sure at least 100 times, at least, that is very, very important. At least 100 times there has been a discussion on the concept of rupee internationalization. Rupee internationalization. Now what is this concept of rupee internationalization? Logic is simple, do not complicate it. Right now, imagine you will purchase something from external market, of course. Right, basically you will make a payment most of the times in terms of dollars. Agreed? Most of the times, not always, in terms of dollars. Which means you have converted your domestic currency into dollar. You will give the dollars to the exporter. The exporter will convert that dollar into the domestic currency. Now some of you will ask, sir, what if the exporter is from USA? If the exporter is from USA, you don't have to convert. That is, the exporter doesn't have to convert because he is already getting the payment in terms of dollars itself. So have a look at this very carefully. Whenever the domestic currency, what is the domestic currency for us? Rupee. Whenever the domestic currency, that is rupee, will be used to conduct transactions by not only the residents of India, but also non-residents of India. I'll repeat it. What is basically idea of internationalization? Residents will use rupee for any transaction for that matter. For example, you will purchase a good, you will make a payment in rupee. You will purchase a service, you will make a payment in rupee. You will purchase shares, you will make a payment in rupee. So just not the residents, even if the non-residents, that is external market, even if the non-residents will start using rupee, that is called as internationalization of rupee. Any issue with this? Let me know. Even if the non-residents start using, right, rupee, then this is called as internationalization of rupee. For example, very recently in the newspaper, this article was coming across all the newspapers. With more than 18 countries, right, we want to conduct rupee trade now. Right, we want to conduct a rupee trade. What do you mean by rupee trade? Please understand the logic here. You will make a payment of rupees, you will receive the payment in rupees. You do not have to convert into dollars. I hope you understand. The intermediary currency. What is the intermediary currency here? Dollar. You will convert that into dollar and you will make a payment. Right? Or if you have exported, you will receive dollar, you will convert into rupees. That requirement will not be there. You do not have to convert into dollar. Directly payment is done in rupees. Payment is received in rupees. That is rupee trade. I hope you understand this. Right, so that is the idea of internationalization of rupee. Okay, just a second. It has jumped to the last slide. Okay, so that is basically the concept of internationalization of rupee. Let's start. The term internationalization, often appearing in news, is associated with, first one, domestic currency can be used by the residents as well as non-residents. Is the statement correct? Of course, yes. Right, freely, anybody, not only Indians, even non-Indians can start using rupee for accepting, making payment in rupees. The domestic currency can be used for settling any transactions including goods but not financial instruments. Slightly tricky. The domestic currency can be used for settling any transactions including goods but not financial instruments. Please understand this. Whenever you talk about internationalization, right, if you talk about internationalization, it's not just covering trade. I hope you understand my statement here. It's not just covering trade. Yes, if you start trading in rupees, yes, we are moving towards internationalization. But is it okay if I say rupee will be international currency only for trade purposes? Only for purchasing goods? What about services? What about financial instruments? Right? Don't you think even when you conduct financial instruments trade, services trade, you should be allowed to use rupee for settlement purposes, for conducting trade in terms of services, financial instruments, etc. So, argument is yes. When you say rupee is an international currency, right? When you say rupee is an international currency, just like dollar, it means any transaction you will be able to conduct in terms of rupees. For example, today dollars, right? I hope you understand this. Today dollars, can you use dollars to purchase stocks in the international market? Answer is yes, by the way. Can you use dollars to import services? Yes. Can you use dollars to import goods? Yes. But right now, please understand, we are covering only part of the total transaction, that is goods. We should be shifting to services. We should be shifting to even financial transactions. Right? So when you talk about international currencies such as dollars, that's a favorite. That's the reason why dollar is a favorite in the international market. Second statement is wrong. Internationalization means all the transactions. I hope you understand. Some of you will contest me. You'll simply say, but we are conducting trade, only trade in merchandise. My argument is, if you want to make rupee as an international currency, you should be conducting trade in rupees, goods, services, as well as financial transactions. So second one is wrong. First one is correct. Right. So right option for the question 41 will be option A. Okay. Question number 52 now. Which of the following have contributed to decline in the Indian exports in recent months? Which of the following, right, have contributed to decline in Indian exports in recent months? Let's start. Rupee depreciation, government policies restricting exports, higher inflation in the global markets, festivals in India. Many of you will not have any doubt regarding the second one. I hope you understand my point here. Many of you will not have any doubt regarding the second one. Government policies restricting exports. Can I give you current affairs examples? Government has restricted exports of sugar. Government has restricted export of, right, let's say wheat. And when the government will impose restrictions like this, automatically exports will come down. And please be very careful, some of you generally get doubt because, or you make it wrong because you have not read the question very carefully. Please read the question carefully. Which of the following have contributed to decline in Indian exports? Please don't skip the term decline there, because I can see the comments, some of you have skipped the term decline. Right? You simply read, which of the following have contributed to Indian exports in recent times? Absolutely no. Actually, it is opposite. Which of the following have contributed to reduction in India's exports? Let's start. Rupee depreciation. You tell me. Straightforward. Will rupee depreciation decline Indian exports? No. Rupee depreciation will not decline Indian exports. In fact, it will contribute to more export competitiveness. It will contribute to the more it will increase export competitiveness. So, of course, one is wrong. And this question I have made it difficult. Many of you keep on telling me question is very easy. I have made it difficult. Why? Look at the option. You cannot use elimination anywhere here. So, let's start. Rupee depreciation will not help you in reducing exports. Second one, government policies restricting exports. Straightforward, yes. Second one is correct. Third one, higher inflation in global markets. Higher inflation in the global markets. Will it reduce exports from India? Answer is yes. Answer is yes. How? Very recently, there is a very high inflation rate registered in European market as well as US market. European market as well as USA market or American market. When there is a high rate of inflation, you tell me what will happen to interest rates? What will happen to interest rates as well as money supply in these markets? Interest rate should start increasing. Money supply should start coming down. If the money supply will start coming down, what will happen to demand? Simple logic, by the way. What will happen to demand? Some of you are saying the money supply will increase. No, money supply will decrease. And when money supply will decrease, what will happen to demand? And again, you don't have to follow all of this sequence. If inflation rate is very high, automatically what will the central banker do there? Reduce the demand. Simple idea. Reduce the demand. And if the demand in the European market as well as the USA market will come down, will the exports from India come down or not? Will the exports from India come down or not? Of course, the answer is yes. And these two markets are very, very important for us. We export a lot of commodities to European market. We export a lot of goods and services to USA market. In fact, USA is one of the biggest trading partner with us. For us, USA is a very, very important market. So when inflation goes up, demand is reduced. As a result of this, exports from India will come down. Now, third statement is correct. Fourth one, festivals in India. Very tricky. In fact, this was actually mentioned by the minister. Festivals in India also have contributed to declining exports from India. How? When you have more and more festivals, and I'll tell you the context also. October to December. This was discussed in the context of October to December, that particular quarter, third quarter. October to December refers to third quarter. So whenever you look at the October to December, is it okay if I say in case of India, festivals are very high in the third quarter? I hope you understand. Right? In the third quarter, festivals are very, very high. And when festivals are very high, you tell me what will happen to number of holidays. What will happen to number of holidays? Number of holidays during this period will be very high. What will happen to production? Production would be affected. What will happen to exports? Exports will also be affected. In fact, I'll repeat it again. Generally, you do not find this in the books. I know that. You will not find this in the books. Right? Why it was given in the newspaper? The minister himself told that this is one of the reasons why exports have declined in the third quarter. Right? So fourth one is also correct. So 2, 3 and 4 are correct. That's the reason I said this question is slightly trickier because of options, right? The statements as well as because of the options. Slightly trickier question. Please be very careful. Okay, so 2, 3, 4 are correct. You'll have to find how many are correct. Right option for the question will be option C. Only 3 are correct. Now let me go to the next question, but before that, a very important announcement. If you're yet to subscribe to BYJU'S Exam Prep IAS YouTube channel, kindly do it now. Hit the subscription button, hit the like button as well. Provide your valuable comments in the section below. I go through all of your comments, and if I find that there's an interesting comment in the form of question, I generally pick it up and try to address it in the very next session. For example, today, if I find some of the students have a common question like this, I will take it up, have a discussion regarding that tomorrow. So anyways, please hit the like button, subscribe to our channel, right? Inform to your friends, peers, competitors as well, so that they will also get the benefit of these discussions. And as mentioned in the beginning, totally 22 sessions are there. Attend all these sessions live, get the most benefit out of this. Now, before that, any questions from your side? Any questions from your side? Let's go. Why option 1 is wrong? I believe you're asking question 52, why option 1 is wrong. My dear, if rupee depreciation takes place, it will increase competitiveness of exports. Rupee depreciation will not reduce exports. It will add to the exports. It will add to the exports. Okay. Can we say that festivals leads to increase in the domestic demand? Yes. Right? Generally, you will see that during festival duration, in the domestic market, the demand for the goods and services will be very high. For example, 2-wheelers, 4-wheelers, TV, refrigerator, etc. Demand will be very high. Okay. What is angel tax? Angel tax in simple terms means when investors, angel investors, invest and get certain equity in return, if the valuation is higher than, if the valuation of the investment is higher than, that is per share, if you have paid more money compared to what is the money that income tax department has calculated, then extra money that you have invested on that tax will be imposed and collected by the government. Right? That is basically, right, the angel tax. Bond yield relationship. Bond, please remember this. Right? Again, I cannot take half an hour to explain that. Simply by heart this. Yield and market prices are inversely related. Opposite. Inverse means opposite. Right? So the market price, if it goes up, yield rate will go down. If the market price will go down, yield rate will increase. Simply by heart this. Now, if anything will affect the market prices, it also means it will affect yields. Tax elasticity, tax base. Tax base means anything, right? Any object on which government can impose and collect taxes. For example, a property such as land. If you buy land, is it not an object on which government will impose a tax and collect? Of course, yes. Share, you will purchase, you will sell. Is it not an object on which government will impose and collect a tax? Of course, yes. Right? So tax base means any object on which government will impose a tax and collect the tax. And tax elasticity means whenever the tax rates are changed, I repeat, whenever the tax rates are changed, as a result of this, how much is the change in the taxes collected? Is it okay? I'll repeat it. If the tax rates are changed, as a result of this, how much is the change in the taxes collected? That is called as tax elasticity. Okay, now let me go to question number 53. What are the likely implications of Indian rupee appreciation? I have clearly written Indian rupee because if I simply write rupee, Pakistan also uses rupee. Then some of you will ask, sir, when you say rupee, is it Indian rupee or Pakistan rupee? Of course, you are writing UPSC, you don't have to ask this question. By default, take it as Indian rupee. Now let's start. What are the likely implications of Indian rupee appreciation? Exports are becoming more competitive. Just now I've told you. Is it correct? If Indian rupee appreciates, will exports become competitive? No. Right? Exports competitiveness will come down. Exports will become costly. Right? Less competitive. Depreciation will increase competitiveness. Right? Appreciation will reduce competitiveness. One is wrong. Use elimination. Right? Already two options are eliminated. Imported inflation in India. Will rupee appreciation add to imported inflation? Think of this. I believe I've discussed imported inflation. I'm pretty sure I've discussed imported inflation, I believe in the first class. First class, that is day for yesterday. If rupee appreciates, will it cause imported inflation? No. If rupee depreciates, right, if rupee depreciates, then it will cause imported inflation. Right, so second one is also wrong. Use elimination method. Voila, you already have the answer. But anyways, higher imports, correct or wrong? Will the higher imports cause appreciation of rupee? Think of this, right? If the imports keep on increasing, it should make perfect economic sense to you, right? If imports will keep on increasing, you cannot pay in terms of rupees. You will have to sell rupees, right? There's a mistake here. Higher imports, right? The rupee, you will have to sell more rupees, convert that into dollar, pay in terms of dollar, right? So rupee will depreciate. Even third one is wrong, but there's a mistake. Just a second. How many of the above statements is or are true? Right, let's start. Exports becoming more competitive? No, right? It will not lead to Indian rupee appreciation. It is a depreciation. Imported inflation in India? No, it will not happen. Higher imports? No, rupee will be depreciating. Affects the revenue of service sector companies such as IT and ITES. Fourth one is correct. I'll tell you why. Right, it should be only 4, right? Option B, it should be only 4. I'll correct it. It should be only 4. How? Right, have a look at this. Fourth point. Just a second. Higher imports, fourth one is correct. Affects the revenues of service sector companies. How? Service sector companies are major exporters. Right, don't worry. Right, I'll come back to third one. Right, I made a mistake there. I'll come back to third one. Don't worry. Affects the revenues of service sector companies. Right, let's say Infosys. In fact, this was there in the current affairs. Infosys has reported that because rupee has appreciated, their export of service have been affected. How? They are exporting service just because of rupee appreciation, exports have become more costlier. Either good or a service. Either good or a service, exports have become more costlier. And as a result of this, right, their exports have been affected, revenue has been affected. Fourth one is correct. Third one is also correct. It will lead to higher imports. It will lead to higher imports. Third one is also correct. My mistake, I am correcting it. Right? Third one is also correct. If rupee appreciates, imports will become cheaper. If rupee appreciates, imports will become cheaper. And because imports will become cheaper, right, imports will start increasing. Done? Right? So, first one is wrong. Second one is wrong. Some of us are saying, then sir, second should also be right. No, my dear. Imports are becoming cheaper. If imports are becoming cheaper, how it will cause inflation in India? I hope you understand this. Right? If imports are becoming cheaper, how will it cause inflation in India? No, it will not cause inflation. If imports become costlier, it will cause inflation. Okay? So, third one is correct. More imports will come into India. And the fourth one is also correct. It will affect the revenues. It will affect the revenues of service sector companies. Why I have written specifically service sector companies? These are exporters. Right? Because these are exporters, rupee appreciation increases the price, reduces their revenue. So, right option for question number 53 will be option B here. Option B is the right one. Okay? Question number 54. Consider the following regarding ASBA. Very, very important current affairs as far as I am concerned. One of the very important reforms that has been introduced by SEBI now. ASBA, application supported by blocked amount. What is ASBA? Application supported by blocked amount. I'll tell you what is the concept of this. Application supported by blocked amount, ASBA. And why it was there in the newspaper? Some time ago, SEBI introduced the concept of ASBA in the primary market. They introduced this in the primary market. And now they have introduced this even in the secondary market. Very, very recently. Right? Primary market introduction was done some months ago. In the secondary market, very recently, right? SEBI has announced they will introduce it. Right? So, what is this idea of ASBA? Let's say you want to purchase a share from me. Secondary market, stock market. You want to purchase a share. You will put an order for it. Now, once you put the order, let's say the market price of the share is 100 rupee. That 100 rupee will be blocked in your bank account. Simple idea. Look at the name, you will understand it. Application supported by blocked amount. Right? So whatever the payment that you're supposed to do, that amount will get blocked in your bank account. Once you conclude the transaction, that is, you will receive the share, this amount will be automatically transferred to the seller. Is the logic okay? Let me know. Is the logic okay? I'll repeat it again. What is the concept of application supported by blocked amount? Whenever you purchase the shares, either in IPO or during, let's say, secondary market now, right? Either in IPO or even in the secondary market. When you purchase, put an order to purchase a security, whatever payment you're supposed to make, that amount will be reserved. It will be kept blocked in your bank account. And once you receive the transaction, once the transaction is over, the amount will get transferred to the seller. Right? That is basically the concept of application supported by blocked amount. Why it has been introduced? Very simple. SEBI says, generally there is a mediator. There is a mediator. For example, through a broker, I will purchase the share. I will transfer the money to the broker. What is the guarantee that the broker will not misuse the money? I hope you understand this. What is the guarantee that the broker will not misuse this money? Right? There can be any misuse that will be done by the broker. And what if there is a mix-up? Because the broker is collecting money from many people like this. What if there is a mix-up? In order to avoid all of this, SEBI has introduced a new system called as ASBA. Okay, now let's start. Consider the following regarding ASBA. It has been introduced only in case of secondary market? No. It has been introduced very much, right, very, very earlier in the primary market, now in the secondary market. The amount blocked under this does not earn any interest. No, this is also wrong. It will earn interest. Until and unless, again please understand, it is saying amount is blocked. Amount is not withdrawn. Amount is blocked. Right? Let's say you have 1000 rupees. Out of that, 100 rupee will be reserved like this. Until unless it is transferred, it will continue to earn interest. Right? So first is wrong. Second one is also wrong. Right? So the right option for this question will be option D, neither 1 nor 2. Question number 55 now. Consider the following regarding municipality bonds. Very, very famous now. Municipality bonds. What is the idea of a municipality bond? A municipality, that is the third level, third tier of the government. The municipality will be issuing certain debt instruments, borrowing from the market. Logical argument, right? Bond, it's a bond. Bond means what? A debt instrument. Right? So have a look at this. A municipality bond is a debt instrument which will be issued by a municipality to borrow, right? To borrow and spend for certain projects. That is basically the concept of municipality bond. Now, why this has been there in the newspaper? RBI, right, at one point of time discussed that municipalities should issue more and more bonds. Very recently, Indore, very important as far as I am concerned, Indore has become the first municipality in India to raise money from retail investors. I'll tell you about it. Have patience. Indore, right, Indore has become the first municipality in India to raise money from retail investors. Right? Why? I'll tell you that. Have patience. So municipality bonds have become very, very famous now. Please be very careful. Now, before I explain to you, or anyways, the issuance of these bonds has consistently increased in the last 5 years. Issuance of the municipality bonds has increased consistently in the last 5 years. Fact-based question, trend-based question. Has it increased consistently in the last 5 years? Please look at the graph and tell me. This is a graphical representation. Right? Don't worry about, sir, what about 2023, etc., etc. Don't worry. Right? This is 2020, this will be 2021, this will be 2019, and here is 2018. So in the last 5 years, has it increased consistently? Answer is simply no. Okay, answer is simply no. Second one, Indore has become the first municipality to raise money from the retail investors. Second statement is very much correct. Second statement is very much correct. Right option will be option B here. Let me give you more points regarding this. Please read this particular representation very carefully. There is a small picture that I've given. I've taken this particular picture from Mint newspaper. It has given so much relevant information regarding municipality bonds. For example, when was the first municipality bond issued in India? They have given it here. First municipality bond was issued by Bangalore Municipal Corporation in 1997. 1997, first municipal bond was issued. Later, many municipalities have kept on issuing bonds in India, but the first one is much more important. Right? Just like in, I hope you have seen that particular movie, Three Idiots, where the principal says only the first is important, second one is not important, ignore it. Do the same thing. Right? So have a look at this. The first municipality which has issued the bond is Bangalore Municipality. Second very important point, I told you, Indore Municipality has become the first one, right? The first one to raise money from retail investors. Now some of you will be confused. Sir, why that is important? Right? Why that is relevant here? And why? Why is that this is the first one? Why not earlier? Because we have been doing the issuance from 1997. The reason is very simple. Whenever these instruments are issued, you are generally not allowed to purchase one of them. You will have to purchase one certain number, minimum amount you will have to purchase. And if I tell you, right, have a look at this. If I tell you, until now, whenever municipal bonds were issued, a subscriber, or let's say the investor, was supposed to invest and purchase minimum 10 lakh rupees worth of instruments. You want to purchase the municipal bond. The minimum amount that you will have to purchase is 10 lakh rupees. Now you tell me, when you keep the minimum purchasing value at 10 lakh rupees, will it be affordable to the retail investors? Right? Will it be affordable to the retail investors? Of course no. Right? It becomes unaffordable for the retail investors. That is the precise reason why retail investors did not participate in this. It was mainly institutional investors. It was mainly institutional investors. And the biggest problem, I'll tell you, look at the outcome of this. Look at the outcome of this. When institutional investors purchase these bonds, they are not purchasing for trading purposes. They will purchase it, they will keep it with themselves till the maturity period is over. Now, can I simply say, because the institutional investors were purchasing, keeping the bonds with themselves, there was a very weak secondary market for municipality bonds. I'll repeat it again. Right? When the institutional investors were basically investing and purchasing these large value bonds like this, and they were keeping it with themselves, then the secondary market for these bonds was not very well developed. Is it correct or not? Please think of it. In fact, this was correct. This is correct. Right? Because they are not selling, they are not trading. So what will happen? Secondary market will not be functional. But if the retail investors are allowed, if the retail investors are allowed to purchase these instruments, minimum value is 10,000 rupees now, right? The minimum value of amount that you will have to purchase is 10,000 rupees. Retail investors are there. Can I simply say it will develop secondary market for municipality bonds. Right, this will promote a development of, right, the secondary market for municipality bonds. Right, that is the importance. That is the importance of this issue. Please be very careful. Suddenly UPSC will say, right, Indore municipality bonds will promote secondary market for municipality bonds. You will keep on wondering, how is that possible? How is that possible that this will promote secondary market for bonds? Because of this. Because of very reason of this. Okay. So these are certain important points. Second point is correct. First point is wrong. Right option for the question 55 will be option B, only 2. Okay. Now, question number 56. How many of the following are the tools available against a hostile takeover? Very, very important. Hostile takeover. How many of these are tools against a hostile takeover? To prevent hostile takeovers, how many tools are available? I have written 4 here. One is poison pill, green mail approach, Pac-Man defense, white knight defense. Understand all of them, right? A poison pill, green mail, Pac-Man defense and white knight defense. The concept of hostile takeover became very, very important for 2 very important reasons in the last 1 year. One is, right, basically because of a Twitter acquisition by Mr. Elon Musk, and second one is because of NDTV. Because of these 2 reasons, the idea of a hostile takeover has become very, very important. First and foremost, what is this hostile takeover? Hostile takeover simply means without any approval of the board of the company, an external person is acquiring the company. Without any approval, without any approval of the board of the company, without the owner's approval, they are simply acquiring the company. That is basically hostile takeover. Right? The owners don't want to sell it, but they have acquired the company. Sir, how is that possible? If the owners are not willing to sell it, they have acquired the company. Please remember the numbers here. Generally, whenever you talk about these companies, of course, both NDTV as well as Twitter, right? In case of both of them, 51% ownership is important. I hope you understand. Right? 51% is important. Right? Why? Anybody who owns 51% is the majority owner, and they can take decisions for the company. And if you acquire 51%, that's it. You become the majority owner. That is exactly what was done by, right, Mr. Elon Musk, and that is exactly what was done by, right, Adani company in case of NDTV. They ended up acquiring more than 51%. Now, let's start. If there is a concern that there could be a hostile takeover, what can you do in that instance? What can you do to prevent hostile takeover? Poison pill? Yes. What is a poison pill? Imagine the owners are there, shareholders are there, more shares will be issued. Simple. More shares are issued. If 100 shares are there, 100 more shares will be issued now. So totally how many shares will be there now? 200 shares. If let's say Mr. Elon Musk wants to acquire this company, more than 50% means rather than purchasing, right, just 50 shares earlier, now he will have to purchase more than 100 shares, which will become costly for the acquiring company. So poison pill is one, correct. Green mail. What is the side of a green mail? Imagine you are the owner of the company. I have purchased 25% ownership in your company, and I have told you there is a concern that I will purchase more, become majority owner. So what you will do is, you will approach me, purchase those 25% shares from my side at premium prices. I hope you understand this. Green mail means what? I have already purchased certain amount of shares. Now you are concerned that I might go for a hostile takeover. What you will do is, you will purchase these shares from me, but at a higher price. Premium. Premium means higher than market price. That is green mail approach. That is also one tool. Pac-Man defense. Pac-Man. Have you seen that game? Pac-Man game. The ball-like structure will be there, and its mouth will be opening, closing, opening, closing. It will keep on swallowing the balls like this. Right? Pac-Man defense simply means the acquiring company is trying to acquire you, but what you will do is you will end up purchasing majority ownership in the acquiring company. That is, again, just hypothetically, do not start jumping and don't discuss this, they are not important. Adani company was trying to purchase NDTV. What if NDTV in return had purchased majority ownership in Adani company? That will be referred to as Pac-Man defense. Acquiring company itself will be acquired, right, by the other company. Right, that is Pac-Man defense. And white knight. What is the basic idea of a white knight? White knight simply means, right, imagine you are there, right, you are owning a company, I am trying to acquire your company, hostile takeover. Rather than selling to me, you will sell it to your friend. Is it okay? Rather than selling it to me, you will sell it to some other company with whom you have got very good relations. That is called as a white knight approach. All these four, right, are basically the measures that can be taken to prevent hostile takeover. Right, so right option for this question will be all the four. Okay, I've written all of them here. Please go through this. Question number 57. Consider the following statements regarding masala bonds. Very, very famous now. Masala bonds. Now, what is this concept of masala bonds? First and foremost, masala bonds are part of ECB. You should not have any doubts. Please remember this. Masala bonds are part and parcel of ECB, external commercial borrowing. Yesterday I have mentioned ECB. What is the allowed limit under the ECB right now? $1.5 billion. Under ECB right now the amount that is allowed is $1.5 billion. Until now it was 750. Now it has been made $1.5 billion. Now under ECB, please remember this. You are allowed to borrow from the external market either in rupees or in foreign currencies. Either in rupees or in foreign currencies. And when you say you are allowed to borrow in rupees, it is basically the representation of masala bonds itself. I hope you understand this. Right? You are basically covering the concept of masala bonds. Now what is this masala bond? Masala bond means when a domestic company will go to a foreign market, and borrow in terms of rupees. Right? I'll repeat it again. Masala bond means a domestic company will go to the foreign market, issue bonds in the foreign market and borrow in terms of rupees. Right? In simple terms, imagine you're a foreign investor. Right? You're a foreign investor. You're sitting in USA. I'm an Indian company. I will come to USA. I will issue a bond. The value of the bond is in rupees. It's not in dollars. Although I'm issuing in USA, the value of the bond is in rupees, which means I will borrow in rupees and I will also repay in rupees. Right? Also understand the benefit of this. If I'm borrowing in rupees and repaying in rupees, as a borrower, am I facing any exchange rate risk? Please understand this carefully. If I'm borrowing in rupees and I'm repaying in rupees, am I taking any exchange rate risk here? Absolutely no. I am not facing exchange rate risk. Who is facing the exchange rate risk? The investor is facing the exchange rate risk. Right? So in case of masala bonds, issuer doesn't face it. The investor will face the exchange rate risk. Now some of you will ask me, sir, in that case, why will the investor actually invest? The reason is very simple here. Masala bonds carry higher coupon rate. Masala bonds carry higher coupon rate, right? Because risk is higher, coupon rate is higher. Higher risk, higher the return. Now come back to this. In case of rupee appreciation, the Indian borrower will be benefiting. Whether rupee appreciates or depreciates, borrower in masala bond will not benefit. Is the logic okay? I'll repeat it again. Whether rupee appreciates or depreciates, Borrower will not benefit. Why? You have borrowed 100 rupees. Have a look at this. Imagine you have borrowed 100 rupee. If the coupon rate is 10%, what is your coupon payment? How much coupon will you pay? 10 rupees. So whether rupee appreciates or depreciates, you will keep on paying 10 rupees annually. So the borrower will not be benefiting in case of rupee exchange rate. In these bonds, investors bear the exchange rate risk. Investors, that is the creditors, bear the exchange rate risk. Yes, statement 2 is correct. 2 is correct, 1 is wrong. So right option for question number 57 will be option B, only 2 is correct. Okay, now question number 58. Consider the following statements. Zero coupon, zero principal bonds are the bonds issued by the government to public sector banks for recapitalization purposes. Some of you are saying yes, it is wrong. Zero coupon, zero principal bonds are the bonds issued by the government to public sector banks for recapitalization. No, this is wrong. Why? Please remember this. Concept of a zero coupon, zero principal is applicable to social stock exchanges. It is applicable to social stock exchanges. Now some of you will comment saying that, but sir, I read in case of recapitalization there is a zero coupon bond. You are right. You are right. In case of recapitalization there is a zero coupon bond. But is it zero principal? Think of it. In case of recapitalization there is a zero coupon bond, no doubt. Zero coupon bond means what? Here is Government of India. Government of India will issue a bond which is called a zero coupon bond or recapitalization bond. Collect money from the bank and use this money to infuse capital. Infuse capital, that is recapitalize the public sector bank. This is basically the idea of a recapitalization. Recently what Government of India has done is, it has started issuing zero coupon bonds here. Zero coupon bonds means principal will be returned, interest will not be paid. I have to understand, principal amount will be given back. No interest will be paid on this. So it is a zero coupon bond in case of recapitalization bonds. But it is not a zero principal bond. But the concept of zero principal bond is there in social stock exchanges. SSEs, social stock exchanges. So first statement is wrong. The issuer of a zero coupon, zero principal bond neither pays back the principal nor the interest or the coupon rate. Second statement is correct. Neither the principal is paid back nor, right, the interest is given to the investor. Right? So the borrower or the issuer will not repay anything. So the right option for this question number 58 will be option B, only 2. Only 2 here. Okay. With higher fiscal deficit, which of the following are likely to happen? Question number 59 now. Right, with a higher fiscal deficit, which of the following are likely to happen? Crowding out of the private sector, higher interest burden for the government, upgrading of sovereign credit rating, and higher debt. Is it okay if I start with statement 2 here? Statement 2. Any difficulty? With a higher fiscal deficit, interest burden on the government will increase. Correct or wrong? Think of this. Right? Is it correct or wrong? If Government of India will borrow more, will the interest burden increase or not? I hope you understand this. Some of you are saying no. Please think of it. Right? If you borrow more, will you pay more interest or not? Of course, yes. Interest burden will increase. And if you keep on borrowing more, will your debt increase or not? Fourth point. If you borrow more, will your debt increase? Of course, yes. Right, so have a look at this. 2 and 4 are correct. 2 and 4 are correct. Now we need to decide between 1 and 3. Now think of this and let me know. Easier one. I'll go back to the first one. It's more technical, but easiest one is third one. Upgrading of sovereign credit rating. Very often you'll come across in the newspaper, right? Very often you'll come across in the newspaper about sovereign credit rating. Right, India's sovereign credit rating BBB, they will say. The borrowing has increased. That's a concern. Liability is very high, etc., etc. So if government of India keeps on borrowing more and more money, fiscal deficit keeps on increasing, 8%, 9%, 12%. Will your sovereign credit rating be upgraded? No, it could be downgraded. It could be downgraded. So 3 is wrong. Now we can use elimination method, get the answer here itself. But anyways, if you have read, even the first one is very, very easy for you. Even the first one is very, very easy for you. Crowding out of the private sector. Will there be crowding out of the private sector? Of course, yes. What do you mean by crowding out? When the government will borrow more. Just think of this. Logical explanation. Sequence is simple. If government will borrow more, what will happen to interest rates? What will happen to interest rates? Right? Interest rates will start increasing. If interest rates will start increasing, will there be more borrowing from the private sector? Borrowing of the private sector, no, it will not increase. Rather, private sector borrowing will go down. Private sector borrowing will go down because the interest rates in the market is higher. This is called as crowding out. This is basically crowding out of the private sector investment. So first one, correct. Second one, correct. Fourth one, correct. Right option for question number 59 will be option C here. Question number 60. Arrange the following parameters in descending order of their weightage in horizontal devolution. Right, I've come to the Finance Commission now. I've come to Finance Commission. Right, because if you're reading newspaper, there is a lot of discussion regarding Finance Commission. Government very recent in the Parliament has stated that they will appoint a 16th Finance Commission now. Right now, in which tenure we are there? In which tenure are we there? In the 15th Finance Commission tenure we are there. So 15th Finance Commission will be implemented for 5 years, starting from 2021 till 2026. Starting from 21 to 26. Right? So that is the tenure. So have a look at this. We are implementing 15th Finance Commission. What are the parameters which are there in the horizontal devolution? You will have to arrange them in descending order of their weightage. These are the parameters. 6 parameters. My suggestion, by heart it. If you are yet to by heart it, please by heart it. Right, so basically the highest weightage is given for income distance. Second highest weightage has been given for population and area. Third highest is demographic performance. Fourth is forest and ecology. The lowest is tax and fiscal efforts. So out of all these, right, out of all of these, I have given you 4 parameters and I have asked you to arrange, right, arrange them in descending order of their weightage. The highest weightage, right, have a look at this, out of all these 4, right, highest weightage is for income distance. And easier for you, at least in this question, there is only one option which starts with B, which starts with 2, not B, which starts with, right, let's say 2. So 2, 1, 3 and 4. 45%, population is 15%, demographic performance is 12.5% and tax and fiscal efforts, it is 2.5%. Right, so the right option is 2, 1, 3 and 4. That is option B. Option B is the right one. Okay. Now, question number 61. Okay. Consider the following statements regarding 15th Finance Commission. The recommendations of the FC are binding on the government. How many of you believe this is correct? The recommendations of the Finance Commission are binding on the government of India. Are the recommendations of Finance Commission binding on the government of India? Answer is no. Please remember this. Someone will say, sir, this is very easy. Second statement is very tricky. Second statement, trust me, is very tricky. So recommendation of FC are binding on the government? No, it is not binding on the government. Second one, the actual tax devolution under the tenure of 15th FC so far has been 41% of divisible pool. Please look at the statement 2. Look at the statement 2. The actual tax devolution, they're not asking you recommendation. They're asking you actual tax devolution. Actual means what? We are there in the 15th Finance Commission tenure. All of you will agree? Right? We are in the year 2023. The tenure of the 15th Finance Commission has started from 2021. So now the question is, between 2021 to 2023, couple of years are over. So actual devolution that is done by the center to the states is at 41%. This is a tricky statement. Answer is no. Answer is no. Right? Why? Use the inference from the first statement. I hope you understand. Use the inference from the first statement. What is the inference there? The recommendations are advisory in nature. These are not binding. If these are not binding, you tell me, will you actually follow these 41% devolution formula? Answer is no. I have given the graph here. Please go through the graph. Do not by heart it. Please do not by heart it. UPSC will not ask you the numbers here. But what you will see is financial year 21, 22, 23, 24, how much is the devolution? Please have a look at it. You will realize this. It is below 41%. It is below 41%. And on the other side, what has been the cess and surcharges collected by the central government? Some of you will be asking me, what is the connection between both of them? Right, the connection I'll tell you now. On the one side, you will see that the devolution to the states has started or has been lower than 41%. But on the other side, the cesses and surcharges collected by the government have increased. For the center. Why this is relevant? Why both are connected? Connection is that if the central government, rather than imposing cesses and surcharges, just imposes any tax, that will go to divisible pool. I hope you understand. Rather than imposing cesses and surcharges, government will impose any tax that will go to divisible pool. But if the government will impose a cess and surcharge, government doesn't have to give this to the divisible pool. Central government will keep it with itself. That is the criticism which has been levied by many states against the central government practice. Central government is accused of collecting more and more tax revenue by imposing cesses and surcharges, and the beauty of the cesses and surcharges is they are not part of divisible pool. Divisible pool means what? From which Finance Commission will give recommendation to be distributed between center and states. That's the beauty of cesses and surcharges policy of the central government. Right, so this is very much relevant. And here itself I have told you one more concept of cesses and surcharges. They can be asked. They can also be asked by UPSC in the prelims. Please be very, very careful. Okay, right, so these are some of the important questions that I wanted to discuss with you people. We'll stop the discussion here. We'll start from question number 62 tomorrow. Right, we'll start with question number 62 tomorrow. Tomorrow will be my last class, by the way. Okay, now before I wind up, again a very important announcement. If you're yet to subscribe to BYJU'S Exam Prep IAS, kindly do it. Hit the like button, right? Hit the notification icon as well, and provide your valuable comments in the section below. And one more very important announcement, we have a PTS test series, Preliminary Civil Service Examination test series. You can take the test either online or you can go to the center. We have both the papers starting Sunday 9:30 a.m. It will be made live on the app, or you can go to the center, write it physically in the center as well. Both the papers just like UPSC Civil Service Examination. One full length paper, GS paper, and second one will be in the afternoon, CSAT paper. You can appear for both of them. Done? So now, right, any questions from your side? Fire away. Question number 58. Question number 58, zero coupon, zero principal bond. Zero coupon, zero principal means I will issue a bond to you. I will not pay the principal. Principal means the money that you have given to me, I will not give it back. The interest also, I will not give it back. Is the government using zero coupon, zero principal bonds in case of recapitalization of the banking sector? No, it is only zero coupon bonds. The issuer of zero coupon and zero principal, that's basically the definition of the ZC-ZP bond. That's the second one is correct. Okay. Any other question? Question number 59. With higher fiscal deficit, which of the following are likely to happen? Crowding out, borrowing increases, interest rate in the market will go up. If the interest rates are high, will you borrow more money or borrow lesser amount of money? Private sector will borrow less. That is called as crowding out. Higher interest burden on the government. If you're borrowing more, interest burden will be higher. Upgrading of sovereign credit rating. If you're borrowing more, are you not taking more risk? Right? Is the government finances becoming stronger? No, government finances are becoming weaker. Right? Upgrading will not happen. There is a danger that, right, it will be downgraded. Higher debt, because the liabilities will increase, debt will be higher. Okay. It should be crowding out in borrowing, as it, my dear, it is called as crowding out of the private sector. Private sector investors will crowd out. Again, look at the term crowd out. Crowd out is a very generic term. Do not just associate that with the discussion here. Crowd out means people are moving away. Crowd in means people are moving towards. That's a very generic explanation. Horizontal devolution. Horizontal devolution simply means Finance Commission initially will tell you out of the divisible pool. This is a divisible pool. Out of the divisible pool, how much money should be going to center and how much should go to states? How much money should be going to the center? How much should go to the state? This is called as vertical devolution formula. Vertical devolution. But if let's say 41% of the divisible pool will go to all the states, now the question arises, how much should Karnataka get? How much should Haryana get? How much should, let's say, Punjab get? So again there is a question. So for distribution of this 41%, one more formula is given, that is called as horizontal devolution. That is referred to as horizontal devolution formula. Hostile takeover. Hostile takeover simply means without the approval of the board. One way to acquire one company is, imagine you are the owner of the company, one way to acquire your company is, coming to you, negotiating with you, purchasing the company from you. But another way of acquiring is without getting any approval from you, without worried about what is your interest. I will purchase majority of the ownership in the company. That is called as hostile takeover. Okay. Poison pill. Poison pill simply means to the existing shareholders, more shares are issued. Logic is simple here. If 100 shares are there, you want to have a majority ownership. How many shares you will have to purchase? 51 shares. To the existing shareholders, I will issue more shares. So rather than having 100 shares, now it will become 200 shares. Let's say hypothetically, 200 shares. Now when you have 200 shares, you want to have 51% ownership in the company, which means you will have to purchase how many out of this? You will have to purchase 102 shares. So compared to earlier system, where even by purchasing 51 shares, you could become majority owner, now you will have to purchase 102 shares, which will make the acquisition very, very costly. Okay? Done? Okay, done then. So let me stop the discussion here. Okay, let me stop the discussion here. Tomorrow we'll start with question number 62. Alright, thanks a lot. Have a great day. Good night. Take care. See you tomorrow sharp at 7:30 p.m.